स्टॉक्स को एनालाइज कैसे करते हैं? क्यों ना एक्सपर्ट से ही पूछ ले। हाय, I'm Arunima and you're watching Stock Hour। अपनी रीसेंट अब इंडिया करेगा ग्रो बेंगलुरु इवेंट में हमने एक सेक्टर वाइज स्टॉक्स में डीप डाइव किया। तो 2000 से भी ज्यादा गेस्ट के सामने हम लाए 4 लीडिंग इक्विटी एनालिस्ट। उन्होंने अपने रिस्पेक्टिव सेक्टर से 4 स्टॉक सिलेक्ट किए 15 मिनट में डिटेल्ड एनालिसिस। बट नन ऑफ दिस इज इन्वेस्टमेंट एडवाइस, ना ही ये ग्रो के व्यूज या रिकमेंडेशंस हैं। तो लेट्स बी क्लियर ऑन दैट। इस वीडियो से आपको बस ये पता चलेगा कि स्टॉक की फंडामेंटल एनालिसिस को कैसे करते हैं। नाउ आगे बढ़ने से पहले चैनल को सब्सक्राइब करें और बेल आइकन दबाएं। इस वीडियो में 4 स्टॉक्स कवर होंगे। ब्लू स्टार की डिटेल्ड एनालिसिस के लिए गो टू 16, HCL की कॉम्प्रिहेंसिव इनसाइट्स के लिए गो टू 1249, एफएल की स्टॉक प्रेजेंटेशन के लिए जंप टू 2253 एंड फाइनली गोदरेज कंज्यूमर प्रोडक्ट्स के लिए हेड टू 3226। सुनते हैं पहली स्पीकर को, जो है मिस नताशा जैन, लीड इक्विटी रिसर्च एनालिस्ट फ्रॉम निर्मल बैंक इंस्टीट्यूशनल इक्विटीज। ये एक CFA और एक CAIA चार्टर होल्डर है। इनकी एक्सपर्टीज है कंज्यूमर ड्यूरेबल्स, इलेक्ट्रिकल्स और EMS। सुनते हैं उनकी डिटेल्ड प्रेजेंटेशन।
So today I'm going to pitch this stock called Blue Star. For those of you who do not know what the company is into, the company provides cooling solutions both in terms of residential AC, commercial AC. Then the company provides commercial refrigeration products, something like a visi-cooler, water cooler, cold storage rooms. Then the company also does something called an EMPS business, which is basically a contract-based business. So you get contracts, you execute them, need not be your own product in terms of the product that you're putting into the business. So that's broad layout of what Blue Star does. Now, just to give you a little bit of industry idea, so in terms of room air conditioner, our penetration is just 8% compared to a global average of 30%. To simplify this, what it means is, India में average household का AC count है 1.5 units. In fact, that's on the higher side. And any house who has one AC definitely has 2 or 3, which means at least 60% of Indian houses do not even have an AC. So that's our penetration level, and that's the strongest tailwind in this industry, in the room air conditioner industry. Next, in terms of geographical bifurcation, all companies across this product category is divided into all 4 zones in India. In terms of the market share, we have majority of players. The top 10 players command 80% of the market share here. So first would be somebody like a Voltas, which sells the highest number of ACs, followed by LG. Then in the line you have Daikin, you have Lloyd, you have Blue Star, and all the mid-level category players. Now, in terms of tailwinds as to what really is going to drive this industry, now first is obvious global warming, rising temperatures. I don't need to, I think, elaborate on that. We're all on the same page when that's concerned. Temperatures are rising. AC will no longer be a luxury. It will be a necessity by each and everyone, be it rural, be it urban. Next is the low penetration level, which is 8%. I've already spoken. It's a very low penetration level. So we have, in terms of opportunity, almost 92% possibility to scale up. Another important thing in this industry is this zero-cost EMI financing. You know, if you go to something like a Vijay Sales, a Chroma, a Reliance Digital, they keep telling you this, that madam or sir, आप अभी AC खरीद सकते हो, आपको payment 2 साल में करना है, आपको कोई interest भी नहीं लगेगा. That's the biggest trigger here. Because if I were a low-income category, and if I wanted to buy an AC now, if my spending of extra 3,000 to 4,000 rupees is spread over 2 years without me incurring any interest cost, that's a boost up for this industry. So that's broadly touched about the tailwinds. Now in terms of headwinds, this industry is currently at overcapacity. Why overcapacity? So earlier during the day, a speaker had said that we are in the manufacturing phase. So government has started something like a production-linked incentive, wherein you put capacities now and government will keep giving you back some incentives over a period of time. So because of that, the industry has put up capacities right now. At this stage, we do not have that kind of demand. We are still operating somewhere around 40% utilization to what the capacity stands. But As and when the consumption for AC increases, these capacities will get absorbed. So in the short term, while it may be a scenario for overcapacity, in the long term, you are essentially preparing yourself for the humongous demand for AC that's expected to flow in. Another important headwind here is probably competition. So there are approximately 65 room air conditioner brands in the market currently. I mean, I'm sure all of you must be knowing maximum 15, but yes, there are 65 brands selling ACs. So there's a lot of price competition. Now, I will touch it later, but just to give you one gist, why I like Blue Star is one of the rarest companies in the entire gambit who does not get into price discounting, despite competition increasing. They have maintained their prices and therefore they have maintained their premium salience, versus other players like a Lloyd, like a Voltas, like even a Daikin, who have slowly reduced prices because of increased competition. Next, this is just a table showing you what is the kind of growth that's expected in the room air conditioner industry. We hardly grew at a under double-digit CAGR in terms of volume, in terms of value close to 11%. Now, from here on, there is a linear growth. Obviously, there is a risk that weather conditions might not play out, but what we saw in FY24 was, despite there being rains in summer seasons, winter seasons were even hotter. So people who didn't buy ACs in the summer season actually bought ACs during the month of September, October, November, and December too. So even if there are unseasonal rains, I think there will be enough months in a year wherein the offtake of room air conditioner will increase. Now this slide is in particular to Blue Star. Now why I like Blue Star is, see, room air conditioner is, the manufacturers of room air conditioners are almost same. There are only 3 manufacturers in India. So your product is not very different from your peers. But what gets you the differentiation USP is you add, you spend, you advertise your product. Now in terms of Blue Star, the ad spend is about 3.2% of their top line, which is the highest in the industry. Industry average is in fact somewhere around 2.8%. In terms of commission, 0.7 versus 0.5 of the industry. If your product is well, if you give good sales commission to the distributor, he is going to push your product. In terms of R&D, Blue Star is the highest R&D spend company probably after LG. Now, Blue Star ensures that the product is of high quality, high durability, and therefore lesser after-sales complaint. While it's good that it's an increasing count, thing to highlight is the maximum extraction from the dealer is highest for Blue Star at almost 4.5 million per dealer. Now, industry average is below 4. So, while his price is higher, he does not get into price discounting. He is a premium player and yet he is able to extract the maximum from the dealer. Usually, it's the opposite. If your product is cheaper, the dealer pushes your product more. But in Blue Star, he is a premium player, high pricing, yet he extracts the maximum amount from the channel. The other set of business is the EMPS or the MEP business that I was talking about. So here, in terms of competition, probably Voltas is the best competitor for Blue Star again in this category. Now, the thing I like about Blue Star is it is exposed to domestic market versus the Voltas who's probably exposed to Middle Eastern geographies. 90% of his book is India-based. When you are India-based, if there is a problem, you have laws. Laws are not opaque, like the Middle Eastern where probably Voltas is focused. When laws are not opaque, if you have an issue, you can actually reach out to the court and your issue gets resolved faster. Just in terms of numbers, if you see his EBITDA margins have constantly been on a rise, if you bar the COVID times, versus his competitor who's consistently making losses. So this is about the other side of the business. Now, in terms of strength, he is the only player in India, in the Indian gambit, who has actually started commercial exports. He's already rolled out his products to American and European geography. He's awaiting feedback. 9 to 12 months down the line, he should start exporting commercial AC. India, every 1/3 commercial AC put is by Blue Star. Blue Star is a leader in Indian commercial space, so that helps him leverage that technology and use it to make the products in order to export. That is his second strength. Timely ad spend is another strength of Blue Star. So during IPL, I don't know how many of you saw, but there were 3 ads rolled out by Blue Star. Virat Kohli was in it. See, this is a very, very timely ad spend. It's summer season, it's IPL, entire India is watching it. And then you're flashing your ad with a brand ambassador, somebody like a Virat Kohli. So you get higher visibility, higher absorption. And in fact, in the fourth quarter, Blue Star did amazingly well in terms of getting his products sold at tier 2 and tier 3 cities where probably he was not that present before. So high ad spend versus spending it at the right time is very important. In terms of commercial refrigeration, Blue Star is again one of the best players on the ground. If you walk into any dealer shop, I believe you will only see two kinds of fridges. In fact, even in restaurants, if you pick up the cola from the fridge, it is either a Voltas or a Blue Star. So in that category, both of them are doing well. Lastly, in terms of financials, Blue Star has not expanded as aggressively as a Voltas or a Havells. Blue Star says, I will anticipate the demand and I will increase my capacity as per the demand. So this ensures that they do not have overcapacities and therefore lesser depreciation on their P&L. Blue Star is one of the only players who has lowest absolute depreciation or even percentage-wise depreciation compared to their peers. In terms of weakness, in commercial refrigeration, Blue Star has lower capacity. However, they are scaling it up. So I would not count that as a weakness. Opportunity, obviously low penetration, high opportunity, export market, very high opportunity. In terms of threat, I already covered there are 65 players and there is lower pricing. You don't have an advantage to price up your products. Quickly, I'll touch upon the fourth quarter result. Blue Star did well overall in terms of top line. Margin was again flattish. His margin was flattish because he did a lot of high-cost ad spend. Now, I like this strategy. He is organically growing, plowing money back into the business rather than discounting the channel. Discounting is an inorganic style of growth. If you create visibility, people will come back the second time to buy your product. So visibility at a consumer level is more important. Blue Star is doing that. Lastly, in terms of valuation, now this sector is a high growth sector with high tailwinds. Because we are at 8% penetration, high possibility that this sector is going to continue to benefit as long as there are very strong summers. In terms of valuation, again, I like Blue Star. I think from here on, if you hold on to a medium to longer term perspective, there is an easy 35 to 40% upside here. In terms of Voltas, there is a 15 to 20% upside in the same time frame. In terms of Havells, it's pretty much fairly priced because not just AC but many other things drive Havells. Now you may ask that I've told Voltas is also 20%, Havells is also a pretty decent company, then why not all the three? The reason is you want to be concentrated, you don't want to be overexposed in a single sector. So therefore you pick the best company which is going to give you the best return and therefore you do a concentrated bet. And that's why amongst the three, my pick is Blue Star. So yeah, I'm done here with my presentation.
वो थी मिस जैन की डिटेल एनालिसिस ऑन ब्लू स्टार। अब नेक्स्ट मिस्टर अमित अनवानी। ये प्रभुदास लीलाधर इंडिया में एक लीड रिसर्च एनालिस्ट है। इनका एक्सपीरियंस 13 साल से भी ज़्यादा का है। ऑल्सो 2013 में इनको वॉल स्ट्रीट जर्नल का एशियाज बेस्ट एनालिस्ट इंडिया का टाइटल दिया गया था। ये डिफेंस सेक्टर में स्पेशलाइज करते हैं। नाउ लेट्स चेक आउट हिज प्रेजेंटेशन।
So we'll be discussing Hindustan Aeronautics, one of the leading aircraft supplier to defense sectors, Air Force in India. So just to put some context to the defense sector, we would be probably about the fourth largest defense spender. The company manufactures aircraft and helicopters and one of the largest defense PSUs in India with almost about 30,000 crore revenue, and the defense revenue in total in the country would have been about 1,20,000. So that way we can see about 25% market share in the overall defense consumption in India. So having said that, you can see in the past the company has just grown by 6 to 7%, and largely because a lot of aircrafts were only assembled in India, and the transfer of technology from Sukhoi, the Russian teams, and from the Israel side. So that has actually not held up the revenue growth which company might have witnessed. But past 3 years, 3 to 4 years, with LCA, the light combat aircraft, where we got the first prototype in 2017-18, we got few orders. It is a homegrown platform with co-developed with DRDO. And I think that was a breakthrough for the company. So we can see that the companies now has projects including Tejas Mach 2, EMCA, which I'll discuss, but LCA breakthrough. So they got 44 number of orders in FY18, and then almost 90 orders now, and 170. So collectively almost 250 aircraft they have to deliver over next 7-8 years. So there are 250 aircraft where the order has already come. There will be 250 more aircraft where the order is supposed to come. So this 250 aircrafts has increased the order book from 30,000 to now 95,000 for HAL. So that creates a robust pipeline for next 10 years for the company to grow at 10 to 12% CAGR. And I'll discuss the other platforms also. Coming to the tailwinds, which I already explained. So there was a defense acquisition policy, which came in where the government intendedly tried to increase the local component. So the defense faced one major challenge in the past few years is that, as I said, the lack of technology, the import component for us, including Russia, we imported about 40%. France, we imported about 20%. Israel, we imported about 10%. So almost 70–80% import in defense, and this through government-to-government deals or maybe the offsets. But now, with all these policies, the government is intending at least 60% domestic components. So of course, the engine manufacturing, we got transfer of technologies, and many companies are focusing. But the point is, the key focus in the policies is that they would like to increase the local component in defense. And this will create huge vendor base in the country for platform OEMs like HL to procure from vendors and complete the deliveries. And we are talking about export also. Each aircraft requires more than 2,500 LRUs, line replacement units. And this is coming, more than from 4,000 vendors, where we're creating the vendor base if we want to really indigenize and, what we are talking about, self-reliance in defense. So this is really important and critical that that vendor base has to be supported by the government. Government came up with the import list to reduce the, certain products or equipments. The import of that has to be reduced in, next 2–3 years. So at least 5,000 such components are already listed where the import is not allowed. And it has to be procured from the domestic vendors. So that is one. And on the headwind, obviously, as I explained to you, we are import-dependent country with respect to defense. So we need to create a robust vendor base to reduce the import, and also so that in future we are able to export these platforms to neighboring countries or the countries where the competition from US, France, Israel is less. So as I said, 95,000 order book. And we are talking about at least 250 aircrafts to be tendered out. And the company also makes helicopters, Prachand and a few other helicopters. There would be helicopter orders coming in for replacement of at least 300 helicopters in coming 4 to 5 years. So that already has been notified by the company that at least 1,75,000 crore of pipeline is there apart from the 95,000 orders which they have already won. So if I add this up for next 8 years, they can easily grow at 12 to 13% revenue growth. So that is there, and it's a debt-free company. The margins has been improving. We saw margins for the operating margins for FY24 improving by 200 bips, almost 27% margins. And the company has been constantly focusing on leveraging the employee base, reducing the employee cost to sales. India has been pretty weak with respect to technologies on defense, and that has been one of the key reasons for imports. But having said that, the focus has been for the government. So recently, even HL got tied up with G141 engine co-manufacturing in India. And they already got tied up with Saffron for manufacturing engines for helicopters in India. So wherever there is a possibility to transfer the technology and manufacture. That is the objective. And broadly, the objective is to manufacture at least 65% component in India for any platforms which is going into the Air Force or helicopter side. So these are the opportunities. As I said, MiG-21, MiG-29, Mirage 2000, these are the few numbers which I have highlighted here, Jaguar 130 numbers. So this is collectively are going to be phased out in next decade, and definitely higher versions of LCAs, the light combat aircraft Tejas, will be introduced, and will see the serial production. So revenue, as I said, going forward, we are expecting there would be manufacturing contribution. They'll start delivering the LCAs, as I said, 16 in numbers in FY26 and then 24 in numbers from FY27. So the revenue can actually grow for a very long term at 12-13% plus. And because of the deliveries of LCA Mach 1, I think we have rated 5 profits. We saw this time they're able to leverage on manpower. The manpower to sales was at one time used to be 25-27%, which is now almost at 18% as a percentage of sales. So there is a lot of leverage there. There will be a lot of leverage because of the capacity utilization also, as I said, since the deliveries are approaching. So that definitely improves the profits. The company is debt-free, pretty healthy interest income they earn on the cash flows. So the liquidity, there's ample scope, despite they're dependent on the government budget for aircrafts. So growth prospect, I already highlighted. This will be the deliveries which will be coming in, which includes 12 light utility helicopters, Su-30 MKI, and there is an engine upgrade program which is going on for Su-30, which will come, and that will also ramp up the growth prospect for the company. So now coming to valuation, when the company got, I'll go back when it got listed at roughly about 1,000 rupees, and adjusting for split and everything, the stock has been 10x. And this is all because of the reforms which has come in past 5 to 7 years in defense, which completely changed the face. So the way automobiles saw the vendor base creation, let's say in Chennai, and we saw the OEMs building, and there's a vendor base which brokers from different companies. The defense is going to see that kind of massive creation of vendor base to localize a lot of platforms. The only thing which was lacking was technology, where there's a lot of focus on development. The idea is tying up with many companies to co-develop the projects. So that is one. So in nutshell, there's a tremendous future in case there's a stable policy environment for the defense companies for the next 5 years, and HAL will be at the forefront of it.
अब आपको पता है HAL का A to Z. Next speaker, Mr. Rahul Jain. ये वाइस प्रेसिडेंट रिसर्च एट दौलत कैपिटल मार्केट. इन्होंने FMCG सेक्टर में स्पेशलाइज किया है. नाउ लेट्स हियर फ्रॉम हिम.
So ever wonder that when you do some browsing, you leave the browsing in between, and then you go to another app, you see the ad of the content which you were watching earlier, like something you didn't buy on Myntra, eventually comes up another app as an product ad. So what's happening out there is this company called Affle. What they do, when you touch your fingertip on the app icon, in that 1 nanosecond, while that app gets open, some signal goes from your phone that this person is logging into this particular app, and do anybody want to show an advertisement to him? And at the same nanosecond, because you were on app like Myntra before, somebody would buy that slot for Myntra in that nanosecond and show that ad, and it pops up the moment you open the app. So this is something very, very dramatic. It all happened in nanosecond. Company like Affle make it happen by buying the inventory and showing you a very, very contextual ad. As you know, 97-98% of all apps in the world are free to consumer. So advertisement become their only monetization model. And that's why it is important for something like Affle to be very, very contextual and show you the ad so that you actually watch the ad and sometime you may even end up clicking it and going into the another app which you left and close the transaction, and that is called conversion. It is of course relevant because the biggest and most relevant billboard today is the phone screen that you have. Now this is ever evolving, and the latest trend being CTV or connected TV. So many of you might be using something like Geo Fiber, and what you see is that now you even get ads when you're playing some YouTube content on that. So these things make life even more easier for brand to target a particular audience, because they know that this particular connection is in this particular area. So what kind of product need to be sold, and who is watching, what kind of content he's watching, and accordingly place the ad. So this is an area, if you see, there is a global ad spend of $860 billion. A lot of it is becoming digital. It's $135 billion right now. But we see the linear TV, which is $165 billion. And there is a lot of content, a lot of consumer, which are now in the cord cutting phase. So when they do the cord cutting, eventually they move to a TV called connected TV, and that becomes another avenue for players like Apple to monetize. On the strength side is what they call is a CPCU model, which is cost per converted user model. So we all see ads where you just see the ad as a banner on your mobile phone once you open the app. You can just click it, you can watch it, but you don't act on it. That kind of advertisement is very, very commoditized. But what Apple does is something special. They only get paid by their clients when they do some conversion. And what could be the conversion? Conversion could be getting an app downloaded, getting a form filled, getting in, let's say, a visit to a real estate project, getting a test drive fixed for an automobile car, or adding a product to the cart, liking a particular page. So all these things could be important metrics for anybody who is spending their dollars. So this is one form of advertisement where there can be a lot of ROI centricity involved. When it comes to weakness, of course, there is a lot of thing that happens on a vernacular side. If you talk about India's penetration, incremental more smartphones would come by users which may not be native to English, and they would like to work on the regional languages. So ability of advertiser and ad tech company to work on the vernacular aspect of it could be the next big thing from an opportunity point of view. And then, of course, though it looked very exciting from a technology point of view and data relevance point of view, one very important thing that has become relevant is the privacy. And more privacy is getting relevant. There are major fines when it comes to misuse of data that these companies might face. And that's why it becomes very, very critical for them to use your data in a very, very sensible and responsible manner. Evolving privacy law could be detrimental to this kind of business. But as I said in the beginning, 97% of apps are free to consumer. So if they don't show ad, they don't exist. That means all of us end up paying subscription for all the apps that we use. So ads are going to stay, and it has to turn more and more contextual to make it more sensible and ROI-centric. Now, what is the growth prospect for them? As I said, vernacular, that is the biggest thing that would happen in the ad tech space. Every ad tech company is trying to create more and more solution in the regional languages, and that is where the bigger strength will come. What is the competitive advantage is that they work on the end-to-end. As I said, they work on the demand side, they work on the supply side, and they also act as an ad network wherein they buy the entire ad inventory and allow the companies to stay focused on their own core. For example, if there is a gaming company, they make a very engaging game, but they don't know how to monetize on their advertisement side. They can sell entire their inventory to an ad tech company and just simply focus on creating a very, very engaging game. while all the monetization on the advertisement can be done by an ad tech company, and it could be Apple also. Now, valuation, of course, all these high growth businesses comes at a PE valuation which are generally very expensive from a pure point of view, because as a fundamental analyst, most people would like to buy the companies which are low PE. But what we try to see that it is very, very fundamental to understand that a very high growth business are not going to be available at a very, very reasonable valuation. But it's like buying a very fantastic business which has a large TAM, which has a management which can take it to the next level. There is no immediate peer for this company in India, but there's a company called Trade Desk in US, which is almost 9-10 times that of Apple in terms of revenue, and the valuation is around 43 times its 1 year forward earning. So even Apple in India is growing at 50% CAGR with close to 16% EBIT margin, and with that kind of a business, the right multiple in our view could be anywhere between 1.5 to 2.5 times their growth. So even if you ascribe that to their organic growth rate, which is a sustainable growth rate, somebody can think of this business fair value to be, accordingly. So we think the fair value of the business fair valuation for such a business could be anywhere between 40 to 60x. But yes, that's an opinion everybody might have in their own way. So what is the risk? I've addressed this in some manner. Apple ITFA policy, Google privacy sandbox, all these giants are working on technology in such a way that the consumer data is protected, and the devices that we have in our hand, whether it is an Android device or an Apple iOS device, there has to be incremental safeguard so that the data which you have on your phone is not sent beyond the mean to all this ad tech company for monetization to ensure that aspect. And that's why incremental thought process out here could become a challenge for these companies to sustainably make their data relevant and contextual and give those ROI-centric outcome which their advertisers are seeking.
वो था एफिल इंडिया का डिटेल्ड एनालिसिस। नेक्स्ट स्पीकर मिस्टर संदीप अभांगे, ये लीड रिसर्च एनालिस्ट एट एलकेपी सिक्योरिटीज। इन्होंने एफएमसीजी सेक्टर में स्पेशलाइज किया है। नाउ लेट्स हियर फ्रॉम हिम।
I would be talking about a company which is very closely related to that particular industry, which is Godrej Consumer Products Limited. I would like to talk about key tailwinds in the FMCG sector, how the overall FMCG space is kind of evolving, and what are the key tailwinds which we see right now in the overall space. So the biggest tailwind what we are seeing right now is the rural market recovery. If you see the overall FMCG market, almost 65% is almost urban market, and semi-urban and rural markets constitute the rest, 30-35% of share. And we have seen quite a bit of lag in terms of the valuation as well as earnings growth of the companies, especially the volume growth of major FMCG companies like HUL and Dabur, Marico, etc. in the past 2 years, majorly because of the post-COVID kind of phenomenon. But now we have started seeing rural market recover. In the recent quarters, we have seen almost a fair bit of jump in terms of volume growth in the rural market. So key tailwinds are rural market recovery, premiumization and innovation. Apart from brand consciousness, I am also seeing favorable demographics. If you see the average median age of the population of India, it is somewhere around 27-28 years. So that is also fueling growth in terms of FMCG products. These are some of the key tailwinds what I am seeing, and headwinds are basically inflation, competition and distribution. These remain to be the key headwinds, because as you have seen in the past year, inflation had touched almost 7.4% in July 2023. That impacted their sales as customers started downtrading, and that resulted in lower volume growth across the overall sector. And competition is always there and will be always there in the overall space. And distribution also remains a key challenge. How they grow their distribution, that will increase their volume growth. And the reason for conviction on GCPL is basically the major strengths are category creation and breakthrough innovation. So in terms of category creation, they have launched a lot of products in terms of hair care, as well as in their hair care category, where they are #1. So I will talk more on that in the next slides. So if I see GCPL, what is GCPL overall? Their majority of revenues, 90% revenues are coming from home and personal care segment. And if you see, they are present in a lot of, apart from India, they are present in Latin American countries, African countries, even SAARC countries, and as well as Indonesia. So if you can see, they are #1 players in lot of geographies. In hair color, they are #1 in Argentina as well as in India. And household insecticides is also a big market in Indonesia as well as India and the African countries, which are the emerging markets basically. So if you see the key breakup of the company, overall 59% of revenues are coming from personal care. Home care is contributing 36%, which is the household insecticide segment, which I talked about. And if I see the geographical breakup, 57% revenues are coming from India, which is kind of growing a very fast pace, as well as the international business are performing majorly Indonesia and as well as Africa and some of the other export related countries they are having. So in total 57 to 60% of their overall revenues are coming from India. And if I just talk about the overall which are the power brands for company. So if you these are the major power brands, 1000 crore plus revenues in terms of Godrej, Goodnight, Synthol, Godrej #1, which is in the soap category, and Darling is one of their brand in Africa, which is in the hair extension space. And there are other key brands, which is Stella, which is into locks. Godrej is also a market leader in that category. So they are present in multiple categories. They are the leaders. So if you see, the top 11 brands contribute almost 75% of their overall revenues. The growth and competitive advantage for the companies basically increasing their total addressable market. So they are mainly focusing on increasing their markets in their particular categories. That is why they are getting more into international regions. And that has fueled growth in terms of volume growth has been over 20% in some of the categories. So that has the company which it is present in household insecticides, where it is having 57% market share. No other company, like even bigger companies, have been not able to take their market share. That is the kind of category penetration and the brand creation they have done over the years. It is almost a 125-year-old brand as a Godrej, if I talk about. So these are the overall growth prospects what I am seeing, and competitive advantage are leading market share as well as second largest player in the domestic soap category as well. And if you see the management guidance, so the management has guided for high single-digit volume growth as well as mid-teens EBITDA growth for the next few years. That has been the case. If I talk about, if I compare it with other companies, the high single-digit volume growth of 7 to 8% is the highest. Even HUL is growing at a volume growth of 2 to 3% only. And so that is why I like this company overall. And if I talk about financials overall, for FMCG, for any FMCG company, if we say, it is a long-term play. Like any FMCG company would give you a substantially high returns if you remain invested for like above 15 years or at least 20 years. So here you can find out the 5-year CAGR, revenue CAGR of this company. It is 9%, 10-year is 6%. If you see 20-year CAGR, it is almost above 2x. So it is almost 18%. That is the case for profits, 17%, 20-year CAGR. And if I see the 5-year or 10-year, it is only 8%. And even the ROE, ROCE front, the returns what the company has generated overall in these years, if I see the 20-year scenario, it is almost 44 and 32%, which is almost double what they have gained in 5 years. So if you are investing in any FMCG company, you have to remain invested, you will be rewarded, and the returns would be staggering in terms of 18%, 17%. Mr. Sudhir Sitapati, he is the MD and CEO. He had taken over the company in 2021, and the company has seen good amount of turnaround in the overall operational space, as well as launching of newer categories, penetrating in newer areas, penetrating in new geographies. So the company has basically turned around after Mr. Sudhir Sutapati had taken over, and the company has a rich history of almost 125 years. And if you see the governance also, the company is AAA rated and A1 plus rated as per ICRA. And if I do the competitor analysis, so GCPL recently acquired Raymond's consumer care business for almost 2,800 crore. So if you see their big brands like Goodnight or even Hit or any other Stella, which is into lock, they have acquired those brands and they have scaled up so big that they are almost 30 to 40,000 crore of market cap of this company. So if I talk about Goodnight, they had acquired that brand in 1994, and they had again sold that particular brand to some other company, and then they again acquired. So that brand, when they had acquired for 100 crores, now it is churning out them for it is contributing their overall revenues as high as 30,000 crore. So that's how they have scaled the brands after acquisition. So I believe the recent acquisition what they have done for their deodorants and sexual wellness products, so that is also going to be scaled up the same way how they have scaled their other categories. And they are currently a market leader in household insecticides and hair care category, and they are also increasing the premiumization of their personal care portfolio. They are introducing newer premium products for the consumers which are in demand, the newer consumers. And if I do the if I see the emerging trends which I talked about, the overall rural as well as traditional trade, modern trade has been growing the fastest. It is growing at almost 20% growth in the majorly because of the retail sector presence, which you will find your products in almost every other areas. And modern trade growth has been led by that, and generally rural was lagging in the past few quarters. That caused the kind of correction in the overall FMCG space. But right now we have started seeing recovery. So we are quite bullish in terms of the overall FMCG sector. And if I talk about the risk for the company, currency fluctuation remains to be a key risk, because they are present almost 50% of their revenues are coming from international geographies. So any kind of deflation or high inflation, like say suppose Argentina had a high inflation of almost 200%. So that kind of can trigger a big fall in terms of their revenues or in that particular region. That remains to be a key risk. And increasing any raw material prices remains to be a bigger risk. And competition is always a risk for any FMCG company. And if I talk about the valuations, so overall FMCG sector has gone has been derated over the past 2 years. So if I see the overall consumer sector PE, if I take the longer term PE, 15-year, 10-year, the PE looks kind of reasonable, 36 times, 41 times, and GCPL is currently trading at around 58 times. And if I see the current valuation of the overall FMCG sector, it is somewhere around 46, 47. So there is only a 5 to 10% premium, and generally FMCG companies trade at premium because they have the advantages of growing their categories in terms of volumes as well. So we believe that current PE is kind of justified, the what turnaround the company has gone through and what lies ahead for the company in their major international as well as domestic categories in terms of creating their own brands. So what I believe is the current PE is somewhere around in the region of fair and mean. So I believe it is a kind of good place to enter. And overall, just concluding thoughts on the company. So if I see the GCPL as a company, they are planning to doubling their almost village coverage and as well as distribution. So, and the company has big plans in terms of, you know, penetrating in the rural areas. So if I talk about the penetration for one of their category, Goodnight liquid vaporizer, this particular category only has penetration of 25% in India. And if I talk about the other geographies, Indonesia and other African region, the penetration is as low as 1 to 2%. So I see a lot of headroom for growth in terms of growth in their category. So they have the brand, they have the possibility of increasing their distribution and reach. So here on, I believe that, you know, there are good times for the company.
तो आज हमने समझा कि कोई भी कंपनी को स्टडी करते समय कई सारे फैक्टर्स को ध्यान में रखना पड़ता है। ओवरऑल सेक्टर की ग्रोथ क्या है, स्वॉट एनालिसिस से क्या पता चलता है, कंपनी के फाइनेंशियल्स क्या है, कॉर्पोरेट गवर्नेंस कैसी है, कंपेटिटिव एनालिसिस क्या है और बहुत सारे फैक्टर्स हैं। वंस अगेन ध्यान रखिए कि कोई भी स्टॉक्स जो हमने आज डिस्कस किए हैं ये कोई भी इन्वेस्टमेंट एडवाइस नहीं है, सिर्फ एजुकेशनल पर्पसेस के लिए बताया कि फंडामेंटल एनालिसिस, स्टॉक एनालिसिस कैसे करते हैं। आप स्टॉक्स को किस बेसिस पे स्टडी करते हैं, कमेंट बिलो। दिस इज अरुणिमा राव साइनिंग ऑफ। मिलते हैं अगली बार। हैप्पी इन्वेस्टिंग।
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.